Hi everybody, it's Nick Strapoli here with Abraham of Abraham Sweeney Law Firm. Just got another scenario for you, actually really two scenarios for you today, Tom. If your people post-hurricane, if they can't afford two homes, so two mortgages because they've been impacted by the storm and their costs are high, what can they do? And specifically, I've got two clients who called in. My first client owes $350,000 on their house. They have an insurance policy for $250,000. And I did the math, the value to sell if they wanted to sell today was $250,000, and they're just really not sure what to do. And then in scenario two, I had another client call me. They owe $200,000. They have insurance for $400,000, so that's pretty good. But their quick sale value is at $300,000 of the value of the property today. What are the options and benefits of each scenario, and what can they do to really kind of make it work for them to their most advantage?
That scenario that you've got with those calls, you have to look at every scenario as case by case. But generally, we can kind of look at certain factors to make decisions on which path to take or what decisions to make. So in the first scenario you were talking about with the first client, that one is a scenario where the debt that they owe on it is greater than 50% of the insurance proceeds that are potentially to be gotten, okay? So what that means is there's no way that if the insurance is going to deny claims and you have to litigate, you would ever get enough money from the insurance claim to cover the debt, okay? Also in that scenario, the current value of the property in its current condition is less than the amount owed on it, less than the debt. So in that scenario, it's a pretty simple, kind of decision, which is, call you and start the short sale right away. Because whether they want to start making payments or continue making payments on trying to carry two houses, or they can stop making payments on the damaged home, sometimes that's easier to do a short sale when it goes into default, but that'll all depend on, some people have clearance with federal government that they can't go into default on something or certain scenarios. But generally speaking, start the short sale right away, because every day that goes forward is only going to get worse. Nothing's getting better in that scenario, okay? The second scenario you're talking about, which is the case where the debt amount is less than what you could sell it for, and secondly, the debt amount is equal to or less than 50% of what the insurance coverage is. So in that scenario, that person can actually make a decision either way, because they can choose to sell because they can take out whatever equity they can take out now. So that's, call you, figure out what the value is, sell it, try to find a buyer. The second portion of it is they can pursue their insurance and pursue the insurance proceeds to, at worst case scenario, win and get 50% even after paying lawyers and the public adjusters and all that. And the numbers still work because they're able to pay off their debt by selling the property and recover at minimum 50% of what the insurance pays out. So in those two scenarios, it's two widely differing answers of what to do. So
are there additional scenarios that need to be explored outside of just those two?
Yeah, because it kind of depends. So the factors, and this is somewhat of an oversimplification, because it does depend on each case. But I would say if your debt is greater than 50% of your insurance coverage, and the value of the property is less than the debt, then you need a short sale because you're not in any other scenario, right? If your debt is above 50% of your insurance proceeds, but you have some equity in the property, well, then you can sell, recover as much equity as you can, and then you can hire the representatives to do your insurance collections, right? So it becomes anything on top, okay? In the scenario where the debt is less than 50% of your insurance coverage, that one combined with your value, what you could sell it for, having equity, your quick sale value, call it, being greater than your debt, you've got that. That was the second client you had, which is the one, hey, sell it, don't sell it, you've got options, right? If you have the debt levels are less than 50% of the insurance value, but your sale value is less than the debt, then you're kind of in a situation where you are needing to short sell the property because the value is less than the debt, which is probably the best idea at that point. Settle up with the lender and then pursue the insurance. However, there is an opening that these are all based on the idea that people can't or are not able to carry two properties at the same time, two homes, because you got a damaged home requires insurance premiums, requires taxes, requires your principal and interest payments. So those will continue. Nobody's stopping it. Now, some lenders will give you a 90-day reprieve after a storm or a scenario. You can do some sort of modifications to try to lower the interest and things like that. But remember, those things take time, right? Nothing's happening overnight. So the question is, how long do you go trying to carry both properties? Your old home and then living somewhere else, renting somewhere else, or if you're trying to buy somewhere else. All these things cost money. So I don't see that the majority of people are not able to just have a secondary home that they're just going to keep paying on, right? So very few people are sitting there in a position where they'll just carry two homes, no problem.
Yeah, it's definitely difficult to come up with an extra $2,000 a month out of nowhere, right?
If not more, because the rental rates are even greater than $2,000 a month
Roof,
now. Yeah. So.
Are there any additional scenarios past that we may need to consider or think about?
We can get into the scenarios where you've got the no mortgage scenarios. You've got an insurance proceeds, you've got a value of a property sitting either below or above whatever the expectations were, but you'd have to determine what the value is first to make those decisions, because you have insurance proceeds you can go after, whether it's flood insurance or whether it's property insurance, and then you have the value of the property. So you've got two people you need to contact. One is FEMA and your insurance, and two is Nick and give me the value of the property. Make a decision. What are you going to do? Because and then in the middle of that is, of course, what we talked about, which is how much debt do you have. Right. So depending on the debt levels, you have to decide: are you going to have to short it? That means negotiate with the bank and settle out the debt, or do you have enough in there where you could sell it for them and then they can make money out of the transaction. So that has to be determined by those two phone calls.
Thanks so much for your time, Tom. I really appreciate you. If you or anybody is struggling from damage from the hurricanes, please feel free to reach out, DM, comment, email, and I'll get you connected with Tom or myself to move things forward. Thanks. Have a great day.